Almost every conversation about becoming a mortgage broker focuses on the wrong things. CMAP, lenders, sourcing systems, networks, compliance, all important, all necessary, all completely useless though if the mental game underneath it all falls apart in month 8. Because the broker who quits in the first year almost never quits because they weren't clever enough or trained enough. They quit because the pressure caught up with them and they didn't have the mindset built to hold it. See, this video is the bit that almost nobody actually teaches at the start, the mental game, how successful brokers actually think about rejection, about income volatility, slow months, failed deals, and the long grind of year 1, not the polished Instagram version, the honest version, the one that decides whether you're still here at the start of year 2. Now, here's why this matters and why you want to actually sit with it. The broker career is a very, very strange one because on paper, the difficulty is technical. You have to learn lenders, criteria, compliance, systems, sales, and beginners assume if they master those, they win, but they don't. Because the technical stuff is learnable. Anybody with reasonable discipline can master it inside 18 months easily. What isn't learnable though, in the same way, is the mental capacity to sit with a slow month, absorb a case falling over at the last minute and take a client rejection without letting it shake your confidence. And also, by the way, keep showing up when your bank balance is going the wrong way and nobody is clapping for you. The brokers who make it past year 3 are almost never the ones with the best CMAP scores. They're the ones who built the mindset to survive the 18-month window between qualifying and earning real money. And the ones who quit the graveyard we've talked about before in other videos, quit for a mental reason dressed up as a technical one. The market's bad, the clients are difficult, the compliance is too heavy. Almost always underneath, it's the same thing. They were carrying the weight without the framework to hold it, and the weight won. And this video is going to be that framework. Now, the first thing you need to reckon with as a new mortgage broker is rejection, because it comes early, it comes often, and if you take it personally, it's going to eat you alive, I promise you. You'll do a discovery call, think it went brilliant, and never hear from that client ever again. You'll spend 2 weeks packaging a case perfectly, I may add, and the client will decide not to go ahead. You'll get ghosted. You'll get told they've gone with another broker who's a friend of a friend of a friend of a family member, because they always exist. You'll get called back 3 months later by someone who was rude to you the first time, wanting help. Now they've realized the other broker didn't actually know what they were doing. And you will get all of this definitely within your first 6 months. None of it is personal. All of it will feel personal. And that gap between what actually is happening and what it feels like, it's the mental game. Successful brokers I see don't feel rejection less. They've just built a complete different habit of not letting a single case or a single client or a single lost deal define the day. They treat each conversation as one interaction inside a career of thousands, not as a verdict of their worth as an advisor. That reframe sounds small on paper. It's the difference, by the way, between a broker who lasts and the broker who cracks. The line to build in your head from day one is simple. If the client says no, it's data, not judgment. Data tells you what to work on. Judgment makes you shrink. Every rejection is either something you can learn from, a better opener, a tighter fee conversation, a stronger protection introduction, or something that had nothing to do with you at all. Sort it into one of those 2 buckets and keep going forward. That's fine. That's the mental habit that separates the brokers who thrive from the brokers who quietly fade out. The second mental piece, and probably the one that catches new self-employed brokers out the hardest, is income volatility. Because in a normal job, you get paid the same amount on the same day every month. And in brokering, you get paid lumpy. That's a horrible word, but lumpy amounts on unpredictable days, depending on when cases complete, when protection premiums land, and when the market's cooperating. Some months you'll bank 12 grand and you'll feel like a king. Some months you'll bank 2 grand and convince yourself that you've ruined your life. That swing is real, and it's brutal for the mind if you're not prepared for it. The successful brokers I know all handle this the exact same way. They separate income from mood. They pay themselves a fixed salary out of the business bank account every month, regardless of what came in. So the good months don't inflate their lifestyle and the bad months don't crush their confidence. The business absorbs the swing and the personal life stays broadly stable. That single discipline, treating your business like an employer and yourself like an employee, is one of the most undertaught pieces of financial and mental hygiene in this industry. The brokers who don't do this end up on an emotional, significantly emotional roller coaster tied to their case pipeline. Every completion is a dopamine spike, every dry week is a spiral down, and every length delay feels like a personal attack. And within 18 months, the mental toll of that roller coaster is what breaks them, not the actual work. The volatility isn't the problem. Riding volatility unfits the problem. Building a filter, a fixed personal salary, a rainy day fund, a boring routine, and the same volatility becomes background noise. Everybody tells you that brokering is a long game. Almost no one, though, explains what that means at the level of a Tuesday afternoon. So here's the practical version. A long game means that most of the money that you'll make from the case doesn't come from that case. It comes from that client's remortgage in 3 years, the referral to their sister in 18 months, their protection review when their income changes, the buy-to-let they purchase in 5 years' time. That single client treated well and kept in your world is worth 10 times more than the actual initial commission of the mortgage itself. And the broker who understands that from day one, they play a completely different game to the ones who are just chasing that next new lead. And the mindset shift is this: every client is a decade-long relationship, not a single transaction. When you hold that in your head properly, everything downstream changes completely. You handle the case more carefully. You take protection seriously. You send the after completion gift. You stay in touch. You send the odd newsletter. You do the retention work that most brokers just completely skip, because you're not measuring your income by what landed this month. You're building a back catalogue that's going to pay you every single month, ideally for the rest of your career. Now, with brokers who play the short game, they earn hard for 10 years and they burn out. The brokers who play the long game, they earn less for the first 3, maybe 5, but then that compounds into a business that pays them for decades. Same career, same lender panel, completely different outcomes. And the difference is which timescale their mind is actually running on. Every broker in this country has slow months, every single one. The market slows in January, the summer dies for 6 weeks, cases fall through in September, Christmas kills November. The idea that a good broker never has a quiet month is a lie that beginners believe and then panic when it happens to them. But here is the truth: a slow month is a test, not a verdict. The successful brokers I know don't panic in slow months. They use them. They do the on-the-business work they never actually had the time for, so like content, marketing, systems, retention, outreach, introducer relationships, protection reviews on their existing books. They plant the seeds for the next quarter while their peers are catastrophizing everything about what's going on in this one, because the broker who does nothing in a slow month has a slow month and then the next slow month and the next slow month, but the broker who plants the seeds has a slow month and then an explosive one 3 months later. The mental line to hold in a slow month is really simple. Nothing this month is telling me anything about the whole career at all. It's a single data point in a much, much larger picture. And the only thing that actually matters is whether you kept doing the work while the market went slow. Panic in a slow month and you will make an emotional decision that hurts you for years to come. Keep working calmly in a slow month, and by the time it lifts, you are 3 steps ahead of every single broker who spent it worrying. Now, if you take nothing else from this video, please take this one. Motivation is unreliable. It's a mood, and moods come and go. Discipline is a structure, and structure is what carries you through the days when the motivation isn't there. Every successful broker that I've ever worked with is running on discipline and on habits, not on motivation. They don't wake up excited to do their 16th follow-up call of the week. They just do it because it's what their default diary says, and that's what they have to do on a Wednesday. Discipline is what protects you when your mood dips, because your mood is going to dip. That's not a personal failing, by the way, at all. It's just being human. It happens to me. It happens to everybody. What matters isn't whether you feel motivated. What matters is whether the work still happens when you don't feel motivated. The only thing that reliably makes that true is a default diary you treat as non-negotiable. Same week, every week, client calls at the same time, on the business work at the same time, protected time for a family, for gym, for sleep, all built in. When your week is decided in advance, the willpower cost of each individual day drops to nearly 0. You don't have to decide what to do next. You already decided that last month. New brokers try to run on motivation and they get let down by it, and then they blame themselves for lack of discipline. But discipline isn't a personality trait. It's a system. Build the system, the diary, the rules, the guardrails, and the discipline emerges from it. That's how top brokers actually operate. They don't have more willpower than you. They just have better guardrails. Now, every broker loses cases. It's part of the job. A chain collapses, evaluation comes in low, a client's job situation changes, a lender pulls the offer. And when you're new, each of those hurts personally because you were emotionally invested and there's no back catalogue yet to absorb that loss. So the mental habit for failed deals matters enormously. The habit is simple. Run a 2 question, review, and then move on. First question, was there anything I could have done differently? If yes, learn it, update your process, and then if no, park it. Second question is, what does this case teach me for the next one? Sometimes a failed deal teaches you something specific about a lender's criteria. Sometimes it teaches you nothing at all, except that cases fall through. Either way, the review is done. The lesson is captured and the case is closed in your head. It's done. There's nothing to worry about. The broker who spirals after failed deals are the ones who let each one of them become a referendum on their complete competence. That's not what you should be doing. They rerun those cases in their head for weeks. They lose sleep. They start doubting whether they should even be a broker. We've all done that. And that's not diligence. That's rumination. And it's a career-ending habit. And if you don't manage it, it's going to get out of control. Learn the lesson, close the case emotionally, move to the next one. That single mental discipline is the difference between a broker who keeps building through setbacks and the ones who stop after the first big one. Now, burnout in brokering gets talked about a lot, but it's usually massively misunderstood. Beginners think burnout comes from working too many hours. Sometimes it actually does, but most burnout I see in this industry isn't about the hours at all. It's about misaligned effort. If brokers spend 60 hours a week chasing cases they shouldn't have taken, following up leads they weren't never going to actually convert, doing complex cases they secretly resent, and then trying to prove something to themselves that doesn't need proving, the successful brokers I know work fewer hours than the burnt out ones. They work on the right things. They qualify hard, so they only take cases that genuinely can help with to protect their diary from the endless small stuff that eats those hours without moving the business forward. They set boundaries with clients on evenings and weekends. They even take time off without guilt because they know the business will still be there on Monday. The mental habit here is what I call matching energy to output. If you're pouring energy into something that's not producing meaningful output, it's not effort. Okay, that's leakage. And that leakage over months is what causes burnout. The brokers who work 4 days a week hard on the right things will out-earn any of the brokers who work 6 days really hard on the wrong things. Every single time that happens, it is always the same outcome. If you're realizing how much of good brokering is about running the right conversations with the right structure, that is the natural thing to think. And the next step for this is what you should actually say in those conversations, because mindset without scripts is just thinking, and scripts without mindset is just burnout. You need both of them. So that's the next video on screen. The mortgage broker sales scripts, word for word, the fee conversations, the protection introductions, the objection handling, the close, the follow-up scripts. Every new broker needs their first 6 months ready to steal, ready to run. Watch that one next and hit subscribe while you're there.